Welcome back to First Home Unlocked. Now, we wanted to jump on and record a quick bonus episode today because there was an interest rate rise announced in the first week of February. So, Chris and I just wanted to have a chat about what this actually means for you as a first home buyer. Hello, and welcome to First Home Unlocked, the podcast for unlocking clarity and confidence for first home buyers. I'm Jack Elliott, National First Home Buyer Specialist at Alcove.
And I'm Chris Bates, ex-financial planner and mortgage broker.
Together, we are on a mission to empower you with the keys to unlock your first home. Let's jump in. So to start us off, Chris, how are you feeling about the rate rise?
I think as you go years on, it's not about sort of what's in our interest or, our buyers' interest or our clients. It's like, what's the moves the RBA have to make because there's a mandate it has, right? And it has to get the inflation genie back in the bottle. And there's been some real challenges with it, right? And I think my first point to sort of discuss around this is that this has been a cat and mouse game all the way back to 2022. There's only going to be a few rate rises. Then it went through the roof. It's going to go higher, and then it's going to be some cuts, and then they didn't come, and then they did come. And so, the interest rate expectations have been flipping like a yo-yo. And, up to the tail end of last year, they did think that, the inflation was in the bag, right? And they were going to slowly cut rates. They did it 3 times. But, some data's come out and maybe the employment market's a bit too hot and maybe service inflation's still a bit sticky and rents are there. And so, the story changed. So I think the first thing to say is that the story could get better or it could get worse, right? The worst story is maybe there's another interest rate rise. And then the better story is actually, no, we're actually going to keep them where they are. Maybe there's some cuts coming later in the year and it does its job. Where it happens, it's anyone's guess, and we're not here to forecast where rates are going. But when you think about consumer behavior, what is the impact it's going to have on, the market? And when you're buying, should you just put your plans on hold now, or should you sort of, still take action? And I think that's what we really want to sort of talk today is like, okay, the narrative's shifted over the last 3-4 months, but what should first home buyers do?
Yeah, and I think we're seeing a lot of first home buyers taking action. We've had a lot of bookings come in with first home buyers looking to have a chat and see what this shift does to their position and what it looks like kind of into the future, into 2026. We're obviously early in the year now. So a lot of people reaching out, wanting to make that really solid plan. And it really just comes back to, I think after a rate rise, it can feel like there is that extra pressure or urgency to get into the market now. So Chris, from your perspective, when there's a rate rise like this, what should first home buyers actually be focusing on right now then?
I just want to put it out there, and we are anti-hype. Like if you look at anything we've ever produced content-wise, all the way back to 2015, I just call it as it is. There's been times when it's been extremely tough to navigate. There's been times when the market's running really hot. And I think when I look at this and where we are in the cycle and where we are in the journey, I think this 5% deposit scheme that got introduced in October is the best scheme if you're thinking about buying, because the benefits are just so great and are so open to such a huge pool of first home buyers. Like it's just, there's no income restrictions, the caps on the cities is just so high, stamp duty concessions, while they're smaller, they're still there in the marketplace. And the next thing is there is just such a strong investor element in the marketplace. And while often they've gone to regions, now I do think they're going to pivot back to our capital cities, i.e. Melbourne's got a very strong investor demand. And so I think what you've got to realize is that the scheme is just so attractive that you're still going to find a lot of first home buyers that want to take advantage of it. It's their way to enter, which they never had the option before. And I think all the way through this year, 1 or 2 rate rises doesn't increase your repayments that much. It doesn't reduce what you can borrow that much. Every rate increase of 0.25 maybe reduces your borrowing capacity 2.5%. So, maybe you could have bought at 700. Now you can buy it, 2.5% on that's like 15, 20 grand. Maybe you can buy it 680 now. It doesn't change it dramatically. And even if there's one more rate increase, it won't change it dramatically. You might get a 4 or 5% bump in your salary and you sort of offset that. So I think first home buyers all the way through 2026, assuming this scheme doesn't go anywhere, will be really strong. And I also think the investment market, 1 or 2 rate rises doesn't mean that investors are going to kill their plan to invest. They're taking a more longer term view, and any rate increase is also tax deductible for them anyway. And so if they're in the market now, they're thinking about buying investment, they're probably going to still kick on thinking it's a good opportunity when there's less demand. And so you could find that prices just stay really resilient and still rise in a higher interest rate environment. Doesn't mean the whole market, but just often first home buyers buy where other first home buyers and investors are targeting where first home buyers are buying.
Yeah, and I think this is where we keep coming back to the same idea, Chris, with first home buyers, controlling what you can control. So you can't control interest rates on the market, but you can control getting a plan in place. And that's why we put so much emphasis on getting really clear on your goals and visions first. What do you want your life to look like? What do you want this property to support over the next 5 to 10 years? So we've linked our goals and visions workbook, which helps you step back and make decisions based on your life and your goals. But it's also worth remembering that interest rate rises and falls are just a normal part of having a mortgage. Rates will move over time. And we actually covered this in more detail back in episode 25, Unlocking Interest Rates and Why They Move. In that episode, we walk through why interest rates change, how to stress test your numbers for future rate rises, and why your long-term strategy matters more than interest rates. So you can go back and have a listen if you haven't already. And another important thing to consider is your buffers and protection when you buy your first home. Because like we've mentioned, rates will always move. So instead of trying to predict or react to every change, it's better to build protection in your plan from the start. So things like borrowing within your comfort zone and allowing room for rate changes in your budget. When you do that, a rate rise becomes something that you've already prepared for. And when you're having a meeting with us and discussing your options, we can show you what rate changes would look like for your budget and then also your borrowing power as well. Now, is there anything else you want to add here, Chris?
Okay, this impact to us is XYZ. Switching off, can we afford it? Yes, that's fine. Okay, let's crack on, business as usual. Let's switch off the media news. Let's get a good asset. This hasn't changed the long-term fundamentals. And the irony of this is, well, often a lot of first home buyers are looking at apartments. They're looking at, a villa unit, sometimes houses, right? And higher rate increases is actually going to really stifle more supply coming. And so, because it's going to be harder for feasibility of developers, it's going to be harder for them to borrow money, etc. So you could also find that also protects a lot of the assets you're buying, because it's really going to mean that we're going to have undersupply, which is going to might also lead to some investors selling as well. So rents might even go up as well. So, there's all these unintended consequences that, it tightens households, but how does this also flow across the whole economy and the whole property market? It's not so, if this happens, then that will happen. It's much more deeper than that.
Yeah, and I just wanted to break down some quick examples to show you the impact a rate rise has both on your monthly repayments and also your borrowing capacity. So let's first look at monthly repayments. Let's say you've got an $800,000 home loan and your interest rate was 5.45% before the increase. So after the rate rise, the interest rate moves from 5.45% up to 5.7%, which means your minimum repayment goes from $4,517 a month to $4,643 a month, which is an increase of about $126 per month. Now, this is exactly why we discussed building in buffers into your budget already, so you are prepared for a rate rise like this. Now, let's look at the impact on borrowing capacity after a rate rise of 0.25%. Now, this impact is very specific to your situation and is usually different for every buyer and different across lenders as well. So let's keep it simple and use an example of a couple earning $90,000 each with no dependents and no debts. Before the rate rise, they could borrow up to a maximum loan amount of around $975,000 with major banks. Now, after the rate rise, that maximum loan amount drops to around $953,000. So about a $22,000 reduction in borrowing power. Now, Chris, what's your advice to first home buyers once they see the impact a rate rise has on repayments or borrowing capacity?
Yeah, they realize it's not as much as they thought it was going to be. They realize that it still doesn't change their plan too much. Sometimes it does. Like it's, often the amount you're trying to spend is every dollar. And particularly in this lending environment, back in the day, clients would always say, hey, I don't want to borrow as much as I can. But in 2026, lending is really hard. It's tight. And so it does impact people, but it doesn't impact as much. I think the irony sort of is here is that, you might find there's more buyers in the pocket that you're looking. And so you might say, well, yeah, when I went to the open home, there was, all these people looking in the suburb, but now actually some of the buyers are being forced out of that suburb have actually come into your suburb. And so the demand's actually the same, if not higher, because maybe not many people have left that suburb. So yeah, it's often that also drives prices back up because you just get these new buyer pools that are being forced into your suburb. And yeah, demand's gone down. Doesn't mean demand's got less. Sometimes it's just a different buyer pushing the price up.
And look, Chris, you've mentioned it and talked about it a bit, but I just wanted to get a summary. So after this rate rise, what are you seeing in the market right now? What do you think could happen after this increase?
Look, one increase, no major difference. So, but if that does play out like as they're expecting in 2026, my gut is it won't play out that way. I think it won't be. Forecasting is ridiculously difficult. It's jumping all over the place. I'm not going to forecast where it's going to be, but I just don't think it's just going to be this, one more rate increase, and that's what's going to happen. I think the story's got many pages and chapters to go, and it's going to change. So I think that if, for example, though, it does play out that way and there's one more increase, I think first-time buyers will kick on. I think investors will kick on, and unfortunately, they're already, being pushed down on their budgets. I do think they're going to come back to the capital cities. I think Melbourne in particular is having a bit of a day in the sun. But I do think the other part of the market is this upgrader market. And I said iron about 10 times in this episode, but the unintended consequence of things like this is that the upgrader market is going to sit on their hands. It's certainty is what they want because they've got somewhere to live. They've got stability, they've got security. To make this next move, it's a big life change. First-time buyers is stressful. Upgrading is a whole other kettle of fish. And for them to make this move happen, they need the borrowing capacity. They need to be really confident around their work prospects. And they also want to have confidence around interest rates. And they've sort of been burnt a little bit over the last sort of 4 or 5 years because they've seen their friends who have upgraded and they've seen the pressure they've gone with higher mortgages. And they've been thankful they didn't have that. But they also know that prices didn't go down. They're actually higher often when they were like the last 4 years. So yeah, their friends had, bigger mortgages and they were stressed and they lived in something a bit more modest and they didn't upgrade, but they also know the prices hasn't come down and they know that, they don't want to be too late and then the market to run on them. So they are going to sit on their hands, I feel, because they're going to want to see where rates are going. And so often that's a lot of what first-time buyers will want to buy is what the upgrade is selling. So they might be selling out of an apartment to buy into the house. And that's what the first-time buyer wants. So it freezes up good quality assets. And I think we'll find is that, it's really hard to find good things for first-time buyers. But you might find that some investors still sell. So that might be the good news for first-time buyers is that, investors who just have been hanging on, they've got their own home mortgage. It's been stressful. They're running things really tight. There's no real sort of, light at the end of the tunnel. So they have to keep paying their expensive mortgage on their home. And yeah, they've got an investment property that's, hardly making any money for them as maybe the cash flow is too much and they have to sell. So that was been a huge part of what happened in the sort of 22 to 24 period. Not so much 25, but I do think maybe you're going to see resurgent of investors sort of bailing just so they can afford to keep their homes. And that's actually not good for rents because, first home buyers buy them, which is great for them, but often that they sometimes aren't renting. So yeah, it's a lot there, Jack, that I can sort of explain, but the reality is that it's quite deep. And I do think though in first home buyer markets, and I think investors will stay really strong. I think it's going to be really hard to find good assets. Just listings are already at all-time lows. If you type in CoreLogic monthly report, you can get it for free online. And if you flick down a couple of pages, you'll see that total listings is really, really low. And it's just very few people are selling across the broader market. Even though we've got, 11 million dwellings, how many are actually selling is not that many.
Yeah, so it's a bit of a watch this space rather than predicting what's going to happen. So if this rate rise has made you feel uncomfortable or unsure about your first home, it's okay. We're here to help. As we've discussed, what matters most is having a clear plan that suits your goals, your budget, and your life. So if you want to talk things through with us, you can book in a get to know you chat with us via the link in the show notes, and we'll help you slow things down and work out the right next step for you in your situation. So thank you so much for listening, and thanks for joining me as well, Chris.
Thank you so much, Jack.
Thank you so much for listening. We'd really appreciate if you could do us a huge favor. Share this episode with any first home buyers that you know so we can help more people like you feel clear, calm and confident when purchasing their first property. You can join our Facebook group, First Home Unlocked, to continue the conversation with other first home buyers. Or if you're ready to unlock your first home, you can book a get to know you chat by using the link in the show notes or by going to firsthomeunlocked.com.au. Before we go, just a reminder that everything we share on this podcast is general in nature and not tailored to your personal situation. We always recommend seeking advice from a qualified and experienced professional when making financial decisions.